with the finance doctor. Your RX for 4X. The gentleman that I'm going to bring before you right now, he has his PhD in finance and economics. He is going to help you understand the why behind the what. He is helping a lot of people, having a lot of fun doing so. So I'm excited. I'm excited this evening to bring to you none other than Dr. Craig Bythewood. Dr. Bythewood, are you on the call?
Yes, I am, Ms. Dyer. Thank you very much for another wonderful training. Thank you very much for all that you do for this group, for this movement, for this IML company. Just thank you for being you. And I also would like to thank all of the mailboxes, all of the rectangles that are here tonight, because you all are walking in an energy which is really contagious. You all are asking great questions. You're really dialing in. You're putting yourself in the best position to learn this skill. And I like the fact that every time we have a Zoom call, at least one person makes the comment that you owe it to tell the people in your circle about what's going on, about what you're doing, about what you're accomplishing. And we all know that when we're building a business, or even if we're just expressing ourselves to others, that it is not our intent to convince anyone. It's just our intent to share with them what's going on in our lives. And when we do that, then they self-select into what feels good. And I've noticed a very interesting pattern about sharing your successes with people. The initial response is usually commensurate with what's going on in their life. So it has nothing to do with you, nothing to do with your success, nothing to do with how they feel about you, but people process information based on where they are at that moment. So oftentimes when you share this with people, that initial reaction may not be what you expect, but it always comes back around, just like the US 30. It always comes back around. So you really owe it to those that you love to share this information, because what's going to happen is as you begin to continue to walk in your economic swag, they'll pick up on it. And they literally will come back to you and say, okay, now what is it that you're doing again? I actually mentioned the acronym IML to my mother 2 days ago, and she said, what's IML? And I literally have been talking to her about this for over a year. So it just takes a while sometimes for it to set in, but that's a reason to share it. So please keep doing what you're doing, keep being who you are. And I really wanted to give a shout out to all of you and what you all are doing. Yes, economic swag is real. So this is a talk with the finance doctor, your RX for 4X. And we call it that simply because we want to provide some metaphorical medicine for all of the economic wounds that we used to deal with, because we're in the healing phase now. And we're now in a position, sometimes when people get sick, they change their life around. They make shifts, they make adjustments, they do things differently. I remember I tore my ACL in 2001, and I used to wear knee braces before I tore my ACL. But after I tore my ACL and I went through physical therapy and built it back up, now my legs are even stronger. So sometimes it's that sickness, it's that ailment, it's that surgery that makes us stronger. So literally, there are some financial situations that we have gone through. There have been some financial ACLs that we've torn in the past, but it's making us stronger. We're doing our own economic physical therapy, and part of it is learning this skill. So tonight, I went to a volleyball game with my children, a high school volleyball game, and they gave out cupcakes. And one of the things that one of the young ladies said was, I like to eat my frosting first and then eat my cake. And so another little girl says something about it. Why don't you just get the frosting? Or why don't you just get the cake? And she says, no, I like them together. I just like it in this order. And somebody else said, well, I like to eat my cake first and then my frosting. Then somebody else said, I like to eat the cake and the frosting together. Why are you talking about this on a talk with the finance doctor? Because I want to remind you that what makes a cupcake good is both. You've got the cake and you've got the frosting. Together, they make a perfect snack, especially for that age group. So I just want you to remember that IML, International Markets Live, is an educational platform. And it's laid out so well. Let's pause and think about who I am and what I do for a living. When I was 26 years old, I was blessed enough to earn my PhD in finance and economics. And so for the last 25 years, I've been an educator. And in that role, I understand how important it is that education be laid out in a way that is user-friendly and can help individuals to get to a better place. Well, let me tell you that I have always been extremely impressed with International Markets Live and the way in which they have this educational setup, this educational process set up. So my point is this: you get better, you develop this skill, you put yourself on the other side of wealth and abundance by going through the trainings in IML. Ladies and gentlemen, that's the cake. That's the sweet cake that tastes so good by itself. But when you add that frosting, now you have something special. Now you have people lining up to get their cupcake. So the frosting is the Be Your Own Bank movement. It's the fact that we have live training calls, that we do training every Tuesday night, that we do live in the market every Thursday night, that we have a talk with the finance doctor every 10 o'clock on Tuesday and Thursday, so we can learn the why behind the what, and we can understand this better, and we can ask questions about personal financial topics. So understand how important it is to do this in the right order. I've never seen a cupcake with just frosting and then they put the cake on it. They start with the cake, IML, educational platform, and then they add the frosting, Be Your Own Bank movement. So let's make sure that we put this in the proper order, in the proper context, because there are some infrastructure, some basic building blocks that you're going to get in the IML Academy that are accentuated by what we do here. So again, enjoy the wonderful moist cake of the IML Academy, and then come to these trainings and put that luxurious frosting on it to make it the perfect economic snack. So a couple of things I heard tonight, a couple of things I've heard over this week that I think we should talk about just so that we're comfortable with what's going on. I said to you last week, and I've said in prior talk with the finance doctors, that one of my Bythewoodisms is, if you know what you are doing, you will always have a job. And if you know why you are doing it, you will always be the boss. So it's so important that we understand the why. So there are a lot of things that we've been talking about these last 2 weeks that we've been exposed to the what. And given the fact that the only difference between me and you is that I happen to have on a blazer and I've been exposed to information while you were doing some other cool things during those 25 years. So I just have exposure to some information that could help make you understand a little bit better. So you don't have to go get your MBA. You don't have to go get your PhD. All you have to do is come to a talk with the finance doctor. We collapse time frames and you can get that same type of information. So I said all that to say this. We've been throwing this term around a lot. The market, the market, the market. Well, what is a market? Let's just pause for a second and ask a question that we may not have asked ourselves because we're ready to jump in and learn this skill. What is a market? A market is nothing but, I hear you, Andrea. A market is nothing but a collection of buyers and sellers. That's it. It is a collection of buyers and sellers. So when you think about it like that, the point that Ms. Dyer kept making tonight about watching the news and understand what's going on, to me, a deeper treatment of that powerful statement she's making is, let's understand who the players are and what they're doing and how that manifests into this chart that we're looking at. So literally, all you're looking at is a collection of individuals who are buying and selling currency. Earlier today, I went to Publix grocery store. There were cashiers set up. Those are the sellers. There were shelves full of products. Those are the sellers. There were individuals parking and walking in and walking out with carts. Those are the buyers. So there's no difference between what I experienced when I went into that grocery store and what's being experienced behind the scenes when you're looking at these markets. They're individuals that are buying one currency and selling the other. Why would someone buy one currency and sell the other? Well, remember what Ms. Dyer told you about her experience. This information was hidden in plain sight right in front of her. She was a representative of the government, and it was her job to sit in the booth and buy and sell currency all day because someone in the military is leaving one country and going to the next country. So the person that is leaving this country is going to sell their currency to her. She's going to buy that currency, and then she's going to sell them a different currency for the country they're about to go to. That one little transaction that Ms. Dyer was doing every single day during her military life is the same thing that's going on every single day by companies, by people, by institutions, by purchasers, by individual institutional investors. That's all that's going on. So understand that us having a greater feel for what's happening behind the scenes gives us more power to understand what's going on. Another term that's thrown out there a lot is technical analysis. Technical analysis. So let's break it down real quick. In the investing market, in the financial market, let's pause on the pause. What's a financial market? Well, anytime you sell something, that's a market. Well, guess what, people? We buy and sell money all day. Every time a bank lends a loan, they just sold money. Anytime you invest in money, you just bought money. So bottom line is that there are two ways of looking at a financial market. Two ways. One way is called fundamental analysis. Second way is called technical analysis. So let's break this down. We're about to get our MBA tonight. Fundamental analysis just means you look at the individual situations that are going on in the company or the country. Why would I say country? Because the currency belongs to the country. So anytime you do fundamental analysis, you're looking at the financial statements. You're looking at the products they just put out. You're looking at what's going on in the political climate of the nation. Think about it. When we pick a currency pair, we don't ask what's happening in the country. Now, we do talk about the news because what the news does is it just sparks something that's going to make those buyers and sellers behave differently. And when they behave differently, it will affect and impact the market, and we can profit off of understanding what's about to happen because we know why it's going to happen. So very simple, fundamental analysis means you look at the individual situation that is going on. Technical analysis instead looks at the actual chart itself. What's a chart? It's so simple, two variables, time and price, time and price. So every time we look at one of those candles, that's a price. It is a price of a currency pair. If we were looking at the stock market, it's the price of the stock. If we were looking at the oil market, it's the price of the barrel of oil. Whatever the market is, all we're doing with a chart is looking at time and price. Time and price. That's technical analysis. If I was teaching this in an MBA class, which I've done before, it would probably take me 3 weeks. We just did it in 3 minutes. Fundamental analysis, looking at the individual situation. Technical analysis, looking at the pattern, looking at the chart. So what we're doing is we're, for the most part, ignoring the fundamental part because we know it's hard to read that. But the chart is going to be the chart because what it shows is here are the buyers and sellers doing what they do, why they're doing what they do, and we're just going to profit off of those movements. That's all we're doing. So tonight, when I went to this volleyball game, I'm the assistant coach at the local high school for girls basketball, and the head coach came to the game. He just had a baby. The baby is 2 months old, and he got to the game late. So I explained to him that when I came in the game, the guys gave me a hard time because they didn't know me. They were ninth graders. They were like, are you a coach? Well, how do you get in and what do you do? And you have to show us proof. And one of the guys said, man, that's Coach Bythewood. Let him in. But the point is, there were so many people there that he was feeling that pressure, and he was making sure that I was supposed to get in free. So I told my coach about it, who came an hour later, and I asked him, well, did they make you pay? And he said, there was nobody there. Think about that. They're selling tickets. We're buying tickets. So in the beginning of the volleyball game, there's a lot of activity, so they're there. But later on, an hour, nobody comes to the volleyball game an hour later, so there's no need for us to even be there. So those times when we say the market is consolidated, there's no activity. There's nothing going on. All the activity starts at the beginning of the volleyball game. There was very little activity at the end, so they didn't even ask him to pay. So all I'm saying is that when we look at it like that, it takes a little bit of the pressure off. Oh my God, how do I know? How do I know? What we do is recognize we're just looking at some buyers and sellers, and we're making a decision on how those buyers and sellers will affect the market, and we'll be able to see what's going on. Let's go back to fundamental and technical one more time. So have you ever had an argument with somebody and it just didn't make sense? It just wasn't emotional. I mean, it just wasn't logical. It was purely emotional. And if you've never had an argument like that, that means you were the one that was being unemotional, or you were being unemotional. Yes, I'm joking. But the bottom line is this. Sometimes people have arguments that aren't necessarily about who they are or what they went through, but it's a pattern. So maybe they've got some walls, maybe they had some experiences as a kid. So when you look at the person and you look at their resume and you look at what they're wearing and you look at what they had for breakfast today, that's fundamental analysis. So there's something you can get from that. You know, maybe I can say that this person has a certain vibration because of what they're wearing. Maybe I can say that they have a certain intelligence because of where they went to school. Fundamental analysis. But when that pattern kicks in, when they feel like they're being threatened and that emotion kicks in and they start responding in a certain way, or they shut down, they don't talk, that's technical analysis. Technical analysis is the pattern. So you can see by my example, they're not always connected. Sometimes who you are determines how you react emotionally. Sometimes they're not related. So I think from an investing perspective, we're in the best spot because we're looking at the pattern. Because the pattern is real. The pattern is the pattern regardless of what's going on individually with the person. Now, having said that, let's talk about something real quick. Let's do a quick history lesson. One of the things that affects who we are right now as a society and the fact that technology moves so quickly is the fact that in 1890, follow me. In 1890, we had something happen that was huge. And what we had happened was that prior to 1890, everything that you and I ever did as a society economically was based on agriculture. Think about the Bible. When they talk about people being wealthy in the Bible, don't they always talk about how much cattle they owned, or how much land they owned, or how many crops they had? Look at the book of Job. It talks about how he had this amount in the beginning, went through all the stuff he went through, then had double that at the end. I just said something. So bottom line is, prior to 1890, everything was agriculture based. But in 1890, it just got real. Because this was the first time that we used technology to make money. In fact, it was so big, we called it a revolution. We called it an industrial revolution because industry was born in the 1890s. Railroads, steam engines. This is big. What? We're going to have a carriage that doesn't involve a horse? What? This was huge for that state of nature. 1890s was the industrial revolution. Now, anytime something happens, anytime there's something going on, people want to dial in and they want to find a way to make money off of it or find a way to find their niche in it. So two dudes, one of them had a last name of Jones. Another dude had a last name of Dow. They said, dude, I got an idea. Let's take these new industrial companies, because there's never been anything like this before, and let's come up with a way to track their movement. But let's come up with this proprietary formula that nobody knows about, and then everybody's going to want to pay us for our formula. So if they want to know how the industrial companies are doing, they'll come to us. Oh my God, that's brilliant. Let's do it. So Dow and Jones came up with the Dow Jones Industrial Average, DJIA, the Dow Jones Industrial Average. And they decided to pick the top 30 stocks, the top 30 industrial companies, because it's the industrial revolution. That's what we're doing here. We're doing industry. So we're going to pick the industrial companies, come up with the 30, come up with a formula, and that's going to be what they call their index. So my 9th grader came up to me today, and she said, Dad, you know I want to get a 4.0. You know I'm taking AP classes, so it's going to be more than 4.0, and I'm having trouble in Spanish. So she recognizes right now, 2 weeks into school, that the index is important. The index for her is the GPA, grade point average. And she even in that conversation recognized that there are two versions of the GPA, because there's the version that's unweighted and there's the version that's weighted. So I said all that to say this. That's all D&J did. They came up with the Dow Jones Industrial Average. But then somebody said, you know what? We're going to come up with another index that's going to be different. And that index, instead of using only 30 stocks, we're going to use 500 stocks. And there were two dudes. It's always two dudes. The first dude's name was Standard. The second dude's name was Poor's. So Standard and Poor's got together to come up with another index that was different, and they called it the Standard and Poor's 500. Today we call it the S&P 500. Same thing. Two different measures of the market. We've been saying the market, but let's know what the market is. The market is a collection of buyers and sellers. And we look at the top 30 industrial firms because the 1890s industrial revolution is what set this thing off. And even to this day, even though there's no such thing as an industrial company anymore, we still call it the DJIA. If you look it up, you Google it, it'll say DJIA. And the I stands for industry, from industrial revolution, even though we don't do industry anymore. Now there's companies in there that don't have anything to do with industry. So all I'm saying is understanding a little bit more about this market, then it puts us in power. So now I've got these two indexes. I've got the S&P 500 and I've got the DJIA. And whenever someone on the news, on Bloomberg, talks about the market, they're usually talking about one or the other. The thing that's interesting is they don't tell you which one it is. They just say the market. And if you've ever taken a statistics class, you've learned that when you bring more data points, it doesn't really change the return pattern. So the Dow Jones Industrial Average and the S&P 500 pretty much have the same return patterns. Now, watch this. What happened in the 1890s happened again. We keep telling y'all, the markets repeat themselves. The patterns repeat themselves. Watch this. In the 1990s, something very similar happened to what happened in the 1890s. We had a revolution. And the revolution was based on technology, except this time it wasn't about a railroad. It was about this thing that I'm talking on right now called a computer. It was the dot-com age. It was a time when we, for the first time, put ourselves in position where we use computers to make money. There are people who's told, I'm an online professor. I use the computer to bring in revenues. You all are online traders. You use your phone or your computer. So the 1990s set that off and it was big. Now watch this. Follow me on this one. So a bunch of people a bunch of companies started realizing something. Yo, we're on this new technology thing and we need all of our capital for research and development. Follow me, I'm going somewhere with this. Now, when a corporation decides that they want to issue stocks, what's a stock? It's just an ownership in a company. Why do we care? Because the stock market is sexy because we want to watch it go up and down. That's what we're doing with the Dow 30. The US 30 is just stocks. It's following the pattern of the stocks. So bottom line is, when companies decide that they want to issue stock, they have to do the same thing you do when you decide you want to live somewhere. You got to figure out where you're going to be housed. So a company will decide one of two things. First, they'll decide to be housed on an exchange. What's an exchange? An exchange is a physical place where stocks are traded, like the New York Stock Exchange. Don't we do the countdown before the bell goes off? That happens at the New York Stock Exchange. So a company will decide one of two things. One, to be on the New York Stock Exchange. Follow me with this. I'm going somewhere. I'm going to bring it back, I promise. So when they decide to be on the New York Stock Exchange, guess what? It costs them $2 million. It costs $2 million to be a member, to have a place on the New York Stock Exchange. So in the 1990s, in the dot-com revolution, companies started saying, you know what? We really don't have to put that $2 million in New York Stock Exchange. Why don't we keep that $2 million and put it into research and development, and let's just, instead of being on the exchange, let's do the second one. The second one is where you allow your stock to be sold on what's called over the counter. See, this country's real good about coming up with something to keep using the name, even though it's irrelevant. Prior to 1933, banks were the only place you could buy and sell stocks and bonds. So what you would do prior to 1933 is you would get in your horse and wagon and you go into town and you give them the money and they give you the stock over the counter, OTC. So to this day, we still call it OTC. So your stock, I'm talking about yours in the company. The company has two choices. They can be on the New York Stock Exchange or they can be over the counter. If you go to the New York Stock Exchange, you got to pay $2 million. If you're over the counter, you don't have to pay anything. So all of these big dot-com companies decided not to be on an exchange and just to be over the counter. Now, just like when I go to Publix, it's all kind of products on the shelves, and I'm the dude buying them. Me and the owner of the product and me, we don't meet each other. Publix is the intermediary that brings the seller and me together. That's what happens in the financial market. And the people who handle that, they're called intermediaries or stockbrokers. Now, or better yet, securities dealers. The securities dealers for the over-the-counter market, notice that all of these companies were coming over to them because all these dot-coms decided to keep their $2 million. So one of the things that was going on with securities dealers back then is they were kind of insecure. They had an inferiority complex because the New York Stock Exchange has that ticker. And all the stock prices go. Well, they didn't have tickers. So what they decided to do is they decided to get together and come up with their own ticker. So let me review real quick. New York Stock Exchange, $2 million. Over the counter, free. All these dot-coms decided to be over the counter. Securities dealers for over the counter, insecure, inferiority complex. They wanted their own ticker. They wanted something to flash their stock prices. So they had a big meeting. And when they had this big meeting, they did the same thing, meaning, follow me on this one. They did the same thing that a woman wants to do when you first start dating them. They want to define the relationship. Oh my God, what are we? And so they defined themselves. And they said, we are a national association. And then they said, okay, well, what are we? And then they said, we're securities dealers. We're the National Association of Securities Dealers. Then they said, well, why are we here? Why are we having this big national meeting? Well, we're having this big national meeting because we want to come up with our own quotation system to show our own quotes, like the New York Stock Exchange has the ticker. So what they decided to do was to name themselves the National Association of Securities Dealers Automated Quotation System. But after they came up with this name of the quotation system that showed the stock price of all of these dot-com companies, they noticed something real smooth. All these dot-com companies had some return patterns that were different than the US 30. That were different than the Dow Jones Industrial Average. That were different than the S&P. So somebody got the bright idea, hey, they're making all this money by being an index. Why don't we become an index too? They said, man, that's a good idea. So they became NASDAQ. So now every time you watch the news, they say the Dow is up today and the NASDAQ's down. The NASDAQ's slightly down and the Dow is slightly up. or they're both the NASDAQ and the Dow are moving downward. So it's two different indexes. Just like my daughter had a GPA that was weighted and a GPA that was unweighted, they just have two different types of markets. So why are we talking about this? Because now we understand the markets a little bit better because we get what they are. So when you and I are trading the US 30, we're trading one of the indexes. We're trading the main index. We're trading the index that came first. We're trading the index that represented the fact that there's a new industry going on. So having a conversation like this, putting ourselves in a position where we understand what's going on, it makes it easier for us to process the fact, oh, I see. This is just a collection of buyers and sellers. And I'm just looking at what the buyers and sellers are doing. And when I do that, I put myself in a better position. So there was an email that I sent to a young lady on Thursday, and she didn't respond. So I got a little bit of attitude because it was time sensitive. So then on Monday, I called her and said, ma'am, you didn't respond to my email. And she said, oh, I'm sorry. I was out of town last week. So I will respond to your email. She didn't respond to me until Wednesday. And she said, Dr. B, my bad, but you know how it is when you first get to work. You got all of this stuff built up and you got to take care of first. Why is he telling us this story? Because you got to think that sometimes that's what these institutional investors are doing. Sometimes they're in a position where they just got to work and they're just not able to start really buying a whole bunch of stuff yet. So when you see the consolidation, somebody said, well, how does he know? He knows because he begins to understand that people on a Monday, after they've been out of town, they don't return emails until later on that afternoon or the next day. So you can start noticing the same patterns. You hear Ms. Dyer say, I don't trade that in the afternoon because it doesn't move. So like I said on Tuesday, the more reps you get, the more opportunities you have to do this and see how it's going, it'll get comfortable with you. You'll start understanding it. So sometimes we just got to take a deep breath, exhale, and be like, you know what? I got this. I'm getting this. I had a conversation with a business partner earlier today, and the business partner said, well, I'm not a trader. And you know, I jumped on that. Yes, you are. And the person was like, you know what? You're right. I am a trader. Those affirmations that I saw y'all doing earlier, I love Phillips. I love that. I am a master trader and I profit on every trade. That's what puts you in the swagger to make you do what you have to do. Now, I said all that to say this. I have a PhD in finance and economics, but I'm going to admit to you that when I was in middle school, high school, college, grad school, I used to say, I'm bad at math. I used to say, I'm bad at math. I didn't have a talk with the finance doctor where somebody could tell me, say what you want to be. Talk in the affirmative. Speak it into existence. Because if you say, hear me, the human brain does not know the difference between imagination and reality. The human brain does not know the difference between imagination and reality. The human brain does not know the difference between imagination and reality. That's why people have died with virtual reality glasses on. So whatever you label yourself as, that's what you will be. If you say I am a master trader, you will be a master trader. If you say I'm not a master trader, you will not be a master trader. And I maybe will tell the full story later about me saying that I'm bad at math, but let me tell you what changed it. What changed it is I was put in a position where I was forced to change it. And once I was forced to change it, now I've been living a life of trying to understand the math. And let me show you an application right now. Someone said, I don't understand the currency strength analyzer. It's confusing. So let's make it simple. Let's make it simple because the dude that used to say, I'm bad at math, now relaxes his shoulders, looks at the logic behind the math, and now it's his. Same brain, same situation, different belief. So everybody knows what the number one is. Boom, number one. Everybody knows that if it's greater than one, that means it's going up. If you look at a number line and one is right here, infinity's over there. So when you go that way, you're going up. Everybody also knows that from 1 to 0, you're going down. And what do we call that? A fraction. a fraction. So all I'm saying is this. Let's use number 1 as the base. Going up, greater than 1. Going down, less than 1. I know everybody's with me because we're all brilliant. Number 1 is the midpoint. Higher than 1, lower than 1. Higher than 1 is bigger than 1. Less than 1 is a fraction. That's all I'm saying. Now, in my analogy, I want you to understand that going up is this. Going down is this. So in this analogy, in this breakdown of numerical swag, we're saying that 1 is our base point, and if we go up, it's higher than 1. And if we go down, it's lower than 1. Watch this. If there is a currency pair, the currency pair on the top is just like a numerator. I don't care how you felt about math. We all know fractions. A numerator is at the top of the fraction. And the bottom of the fraction is the denominator. Numerator, denominator. Numerator, denominator. If it's 1, isn't the numerator and denominator the same? Yes. So this is a great base point for us to break this down, because if the numerator is bigger than the denominator, it's going to be bigger than 1, which is going up. If the numerator is smaller than the denominator, it's going down like a fraction. 1/2, 1/4, 1/8, 1/16. As you make the denominator bigger than the numerator, the fraction gets smaller and smaller like you're going down. Everybody's with me, because all I've said is what you already know. You already know that 1 is the midpoint. And if the numerator is bigger than the denominator, it's bigger than 1. If the denominator is bigger than the numerator, it's less than 1. So watch this. Watch how we just decomputerized the situation that we thought was confused. If the currency in the numerator is stronger than the currency in the denominator, that means the numerator is bigger than the denominator. If the currency that's in the numerator is bigger than the one in the denominator, that means the numerator is stronger. If the numerator is stronger and the numerator is bigger than the denominator, that means it's bigger than 1. Bigger than 1 goes up. That's a buy. If the denominator is stronger than the numerator, that means the counter currency is stronger, and so it's a fraction. And to get to a fraction, what do you have to do from 1? Go down. So it's a sell. So the person who asked that question, I'm feeling that right now because I gave you a logical base that you could internalize instead of you trying to memorize the number. Please tell me that you get it. Please tell me that you understand that 1 is the base. If the base currency is bigger than the counter currency, it's greater than 1, I'm going up. If the counter currency is bigger than the base currency, I'm going down. Bang. Drop the mic. Questions, comments, testimonies about any of that? Whoever it was that asked that question, can you please either type in the chat or unmute your mic and tell me that you understand it? Thank you, Ms. McEwen. I don't know who asked that question, but I really would like to make sure that they're good. Who was the person that said they were confused about the currency strength analysis? Thank you. I appreciate that, TJ. All right, we're just going to assume that the person who asked that question gets it. And if they, oh, dang, they're not here, that's okay. So what we're going to do is we're going to find out who that was, and we're going to suggest that they listen to this tape. Thank you very much, Schneider. Okay, so this has been a talk with the finance doctor. I appreciate your patience. I appreciate you going through this process with me. But we can go through these mental gymnastics and put ourselves in a better position to understand what's going on. I thank you again for everything that's going on. IML, Be Your Own Bank, touching 1 million families. Let's get it. I will now turn this call back over. Thank you very much, Jess.
Thank you so much, Dr. Bythewood. Folks, this is just another layer of what and why we are so excited about having you participate, particularly for those of you who are new to this forum. I mean, to have the luxury for you having a subject matter expert at your disposal. I mean, it just simply makes it that much more compelling. And the simplicity of taking these complex financial terms, which we would assume to be complex, and having Dr. Bythewood make it so simple that now we really understand what the market is. And now when you get that proper understanding, that makes you looking at the charts completely different. That gives you a total level of confidence that when you execute, you understand the pattern, you follow the course, you apply the confirmation, then you will end up in profit. It's just really just that simple. I mean, even to the point where for those of you who stayed in that US 30, take profit 3, if you stayed in that with us, with me, then guess what? You're already in profit. So every single US 30 call that we made today ended up in profit, even with the pullbacks. Even though we understand the market, we know the market is going to make the adjustment. But if we stay the course and stay bold to the outcomes, then guess what? You're going to get the results. So with that being said, if this has been beneficial to you at all, our live trading, our Talk with the Finance Doctor, please put a 555 in the chat. Please put a 555 in the chat. Thank you, thank you, thank you. And once again, IML Web Analyzer, the testimonies that you're having, the experiences that you're having, please share those in the IML Web Analyzer about the hashtag BYLB Cash Out. So folks, we're going to be giving you the update here shortly on the total amount of pips that we were able to gather for the entire month of August. It's been absolutely amazing for those of you who have been with us utilizing the BYLB Cash Out strategy. Once again, kudos to the trade whisperer herself, Ms. Tasha M. Dyer. And folks, we are looking to replicate this movement literally around the globe. And we're just absolutely excited to know that you are going to be in profit. You've made a conscious decision to accept the challenge, to learn how to be your own bank. And now you simply want to share this information with the people in your sphere of influence and the ones that you care about the most. So with that being said, folks, there would not be a call on tomorrow. Remember, our scheduled live trading is Monday through Thursday, 5 a.m. and 9 a.m. Eastern. And then with Monday, Labor Day being a banking holiday, there will not be any calls. We will reconvene on Tuesday. For those of you in the area, we just pray for your safety. If you're in the South Florida area, we just trust and believe that God is going to steer that and you'll be comforted. We just trust that you will be protected. Govern yourselves accordingly. We love you. We appreciate you. Thank you for allowing us to serve you. Thank you for being a part of our lives. Thank you for making a decision and realizing and being excited about the power of your personal yes. Because you said yes to accepting the challenge to learn how to be your own bank, multiple lives will be changed. You will be able to write and create and narrate your own financial legacy because you've been empowered and equipped with the right information. So as we close out this call, as we're heading out, BYLB Cash Out, 888 in the chat, 888 in the chat as we officially conclude this call, as we're signing off, 888 in the chat. Share the wealth, share the information. IML Web Analyzer Facebook group, drop your testimonies, 888-888. And God's willing, we will see you this coming Tuesday.